Content day. We bought this one for 2.65 million. We haven't settled on the property yet, so he's still got, I think, his gym equipment yet. See how many reps I can do. You sure you don't want one of these?
No.
That's all right. All right, let's chat. What we do is we effectively fractionalize property, right? So all of our investments are single asset, which effectively means that there's one property in a specific unit trust. So I know that if I invest 100 grand into this one unit trust, I have a correlation between the performance of this property and my investment. So what that means is, let's say for example, there's $1 million property. We will then unitize that $1 million property into, let's call it 1 million units, right? If I invest $100,000, I will own 100,000 units in that property. And that's what fractionalized property is. The problem here is that people are being forced to go ahead and buy these shitty apartments, and historically, the issue is those particular investments have lost money. That's a fact. Look at South Yarra, look at Melbourne, look at Docklands, look at these apartments there. Since they've been sold, they've only gone backwards in price. What we have done here is we've given the ability for someone that has, let's say 30, 40, 50 grand to look at alternatives. And that is, let's say a property development where you can add value to that property, to that piece of land by developing it. How you can get access to that is, what we've done is you can invest within a fund, and that fund has a correlation between the property that you're investing in. So let's say if that fund looks to have a return of, let's say 15% per annum, if you invest 30 grand, then you'll receive the returns that property fund is achieving. Content day. So this is one of our developments that we're doing over here in Windsor. It's called Masons on Mary. We've actually just only started it. We've gone ahead and completed or just finished the first stage, which is the demolition. The intention is to completely strip it out. It was a 4-bedroom, 1-bathroom, 1-car spot, and we're turning it into a 5-bedroom, 3-bathroom, and 2-car spots, in tandem. So we bought this one for 2.65 million. It's quite interesting because the previous owner purchased it back in 2016 for just under 2.6 million. So I think it was 2.55, something around there. And during that period of time, they've obviously lost a lot in terms of opportunity cost, a lot of upside that he would have realized if he had sold it, 2 or 3 years prior, just post-COVID. However, what we're finding now in the market is a lot of people are scared of build risk. So you see properties that are in need of renovation or in need of development, and no one wants to touch it because, they're worried about, builders going under, build costs, and so forth. So, that's where we find really good opportunities to go in, given that we know the space, and recognize some value for our clients. So we're completely stripping this out. There is going to be no resemblance of the previous home if you have a look through it, but there's a whole bunch of nails and stuff. We're keeping the fireplaces, and we're going to be paying a kind of an homage to the historical value of the property. With the heritage that they have with these particular properties, there's certain factors that you're not allowed to do to it. So you can't just knock things down. You have to keep facades, you have to keep certain things of the property before if you're going to go ahead and renovate it. You got to watch out with buyer's agents, because especially now more than ever, it's so easy to start a buyer's advocacy firm and they're calling themselves property advisors. In fact, listen to this and listen to it carefully. Don't take financial advice from real estate agents, buyer's agents, whatever they call themselves, buyer's advocacies, property advisors. Do not take financial advice from those guys. A lot of the times I see them undisclosed commissions from developers. A lot of the times they have no idea what they're talking about. A lot of the times they're doing everything they can to get a deal out of you and charge huge amounts of fees. And a lot of the time they're not worth it. Buyer's agents can be worth it. We work with a lot of buyer's agents. They bring me a lot lot of opportunities. Pretty quickly, you can tell which ones are the good ones, which ones are the bad ones. You can tell when a buyer's agent's just trying to flog off some developer's property or trying to flog off some random property. And you can tell when the ones that go, they understand the market. They say, Khaled, you can make money here, here, here if you do this, this, this. So don't just work with the first buyer's agent you see on doing an ad on TikTok or doing an ad on Facebook. Do your research. There's some good ones out there, but you got to get through 9 to get to the one good one. I really love this property. So the owner of this one actually owns the 2 adjacent houses. He's actually attempted to renovate this one already over the course of, I think it was 20 years. So we're walking through the property that's already been stripped out, and he's actually re-stumped the property already. So what that means is a lot of the structural work has been done. And so when we come in and build this and renovate it, all of our budget, or most of our budget, doesn't have to be spent on structural, it'll be spent on like finishes. So it's going to really increase the value of the house when we plan on selling it. So stripped off the walls, stripped off the plaster. You can literally see the brick underlay, right here. And then so this is the first room, a lot of natural light coming in here. The backyard's north facing, but you still got some really good light. Cool thing is he's actually already demolished this particular wall here. So it could be 2 bedrooms, but what the floor plan, the mock-up floor plan that we have here is bedroom, and in between there's going to be a bathroom. So these bedrooms will both connect into that bathroom, which would be cool. Another room here. He's already taken out the fireplace, which I think it's good for us, a bit more space. We can use it as a wardrobe. Obviously, we haven't settled on the property yet, so he's still got, I think, his gym equipment yet. See how many reps I can And then you go into this huge open floor plan, kitchen, dining, living room area here. There'll be a bathroom here on the side, another one here, so he turns it into another bathroom, and then we'll have kitchen, and we're going to open this up. So there's going to be bifold doors that stretch across this whole backyard. Opens up into a beautiful north facing backyard here. So it's going to look really good. The exciting thing here as well, which is really interesting, is there's an attic, the room up there, where what we're going to do is we're going to add stairs. The roof is actually pitched quite high, so there's a lot of space in there. So we're going to add a bathroom and a bedroom up there as well. So that's going to be really cool. And that's all within the existing envelope of the house. So go outside, a little bit of a storage area. And then there's going to be, right now, access is only via foot. But if you come out here, there's obviously car access through the back, which allows us to add 1 parking spot or 2 if we wanted to, but we don't want to sacrifice the whole backyard. We'll have 1 parking spot with a roller door, similar to a lot of the other houses down here, and across here as well. Property development can be very lucrative. However, the issue is it's never really been broken down and available to normal retail investors. And so what we've managed to do is create a retail fund where clients can get access to the capital growth or the income available to property development without necessarily having to go ahead and have millions and millions and millions of dollars to do it themselves. So it really takes the risk away from, having all your eggs in one basket if you're able to have those millions of dollars in that one particular project, whilst also getting access to our expertise and IP in relation to actually getting an investment that is returning well for your portfolio. So our projects are done through an ASIC regulated managed investment scheme. That's important because we see other groups out there doing it in various different ways, which doesn't protect the investor. Your funds could potentially be used as their own personal bank account. They could take your money out and use it for lunch. And we've seen, horror stories where money's been used for gambling. What this ASIC regulated managed investment scheme does is protects our investors' funds from all of that. There's a responsible entity whose role, and they're a third party whose role is to go ahead and ensure that every dollar is spent within offer documentation first initially presented to each investor. So this should give you a lot more reassurance when it comes to investing that your funds are going towards that direct project.